Eric Mother, mother.com. As promised, this week we're going to be taking another look or going back to the most important aspect when trying to find stocks, and also when holding on to stocks. We should know when stocks are primed to move, and more often whenever we are looking for new ideas, sometimes we do try and get cute. We are all guilty of it, including myself. We try and make the market a little bit more complex than it is. So this video is just a rehash of some of the things that are important to consider while you're going through the progression of finding your next idea that you might want to add into your portfolio. So obviously the main ingredient for your success is going to be based on how close, and if you're paying a lot of attention and looking for stocks that meet the minimum requirement for the ultimate Moade breakout. And we can take a look at some examples actually. And let's take a look at one of the winning stocks here, PANW, which has had a nice run. You can see here moving, even if we take this breakout here after it made new highs, and that was at a level of about $70, it could go on to trade, now trading at about 190 in less than a year, or about 12 months. That's a great moving stock. That's 3 times your money. And you can see that this breakout here, so this breakout here, and we're not going to spend too much time because by now you do understand what the ultimate Moade breakout is all about. I'm just showing you again, just the more we see these things, the more we appreciate what we are doing. So the breakout there corresponds with this time period in the price breakout, and you can see that the RSI moves to 3-year highs, all-time highs. And as I'm going to mention later on in the video, this move to all-time highs suggests that the stock is at its strongest ever. So that's also something very important to consider when you're looking for new ideas. We see that here the MACDs on the monthly, remember this is a monthly chart, also made a move to all-time highs. We also see that there was another breakout after 1 week of rest, after 1 month of rest. There was this down month here, and then we got another breakout. That breakout also coincides with another breakout in the monthly RSI, and that was also good enough to take the stock to all-time highs. Remember, we are looking for a period where the stock is making 3-year highs, but all-time highs is the best. And we can see that the MACDs did not disappoint, as the MACDs were also trading at all-time highs during this second breakout. And then again we see here that the stock, again the RSI moves above 69.1 for the first time ever, which is during this period here. And also we have what I call the Moade's first mountain, which is this RSI remaining above 69.1 throughout, let's call it from about August of last year to close to August of 2015. So again we see that we are looking at minimum requirements here. We got 1 month of rest, which is what you want to see before a stock takes off. So there's a lot of information on this chart. You got 1 month of rest here and a breakout, 1 month of rest for another breakout. Since then we haven't had a monthly breakout, so the minimum requirement there was met. That's why this, as an example, is ideal. Now there's another stock I'd like to show you that has also done well. Man, I could be making these examples all day long, but a few examples is all we need, because it's the same thing. The stocks are going to have the same signature just before they take off, and we know that the signature is the ultimate Moade breakout. So let's not complicate things for now. Okay, here's a stock that is an IPO. This is a weekly chart. Let's take a look at the monthly. We can see that the monthly doesn't have a fully developed RSI, so we have to default to the next time frame, which is the next bigger time frame, which is the weekly. And so because the monthly is not fully developed, we can go to the weekly to look for the ultimate Moade breakout. You just use the same principles. We can see here that there was a, right there, it's hard to see, but there was 2 weeks of rest right there, and then the stock broke out about 4 weeks ago. And that also corresponds very nicely with the fact that the RSI on the weekly jumped to all-time highs right there. RSI jumped to all-time highs. While it was jumping to all-time highs on the weekly, it also moved above 69.10. So there is your ultimate Muad'Dib minimum requirement, and we can see that while all that was taking place during that time period, that the RSI was making a move to all-time highs and also moving above 69.1. We see that the MACDs were also moving to all-time highs and at least 3-year highs. But all-time highs is the best and gives you the best signal. So here we see that we can use the same ultimate Muad'Dib breakout even for IPOs. Now, if this was not fully developed, then we have to go to the daily. If the daily is not fully developed and you want to own an IPO, you have to use the hourly, and you use the same principles as the monthly in terms of all-time RSI and MACD highs. So there's a good example of a stock in an IPO format. Let's take a look at another one that has done well. We're going to go back to the monthly. It's just an example. There's so many. The stock has had a nice run, and you can see here, after going sideways for a couple years here, finally took off. So the ultimate Muad'Dib breakout gives you an opportunity of owning such a stock that was dead money here for a while before jumping from about $8 and has now doubled in about 10 months, actually about 9 months or so. Just want to rehash why it did so, and of course you know the reason why is because it met the ultimate Muad'Dib breakout minimum requirements during the breakout. Even if we take this breakout here in price here, this entry corresponds nicely with the RSI. Whoops, excuse me. So let's start that again. So let me draw that again. So we are talking about this period here. You can see that RSI had already moved to 3-year highs, and also again 3-year highs moved to 3-year highs, and we see that the MACDs were already trading at 3-year highs. Remember, on the MACD we only need one of these MACDs on the settings. One of them needs to be at 3-year highs or at all-time highs. So we can see that the ultimate Muad'Dib breakout was also met for this stock. So that's what we are always looking for, that the stock that you're trying to own should show the ultimate Muad'Dib breakout. Now let me give you another example of how you can use that. So right now it's about the middle of July 2015, and I'm going through my daily charts, and I have there's about 10 pages here of charts, and each of them is 10 pages. Just an example. So I have about 40 stocks that I've been listing and shortlisting all day long. And so if I was to consider one to buy or to send an alert to subscribers, all I'm looking for here is the ultimate Muad'Dib breakout, and I go through all of these stocks one by one looking for the ultimate Muad'Dib breakout signal. So there are so many, there's 40 of them, and there comes a point when I have to decide based on how they're setting up which ones are more likely to do well. And so once you have a group of stocks, and here I have 40, my job now is to go through each one of them, because most of these stocks do meet the minimum requirements for an ultimate Muad'Dib breakout. Most of them do, because that's all I've been doing all morning, and it's mid-afternoon and I'm still going through the list trying to narrow down. Now I personally like to use the manual process of finding stocks. The reason why I do that is because it gives me a feel and a sense of how stocks are behaving and how markets are behaving internally. Now some people, and I think most people, like to use software to find their ideas. No problem with that. At the end of the day, all we are doing is trying to find a way to find the next great stock. And so here it is. So basically what I'm showing here, I have a lot of stocks here to look at, about 40 of them for today. And so to narrow down on this list, what you have to do is look at other parameters. And one of the things you can do is, before you buy anything, or if you want to shortlist your group of stocks you're watching, make sure that they are in the top performing sectors. Let's say the top 10 performing sectors over the last 6 months. That's okay. Or even 3 months. if you have software that can give you the best performing stocks, let's say even over 9-month period, and sometimes you can even look at the 1-year performance. You want the stock that you're looking to buy to be belong in a sector that is either the top sector in the last 1 year, either last 9 months, last 6 months, or last 3 months. These tend to be the ones with the biggest moving stocks, and so if you can find the best stock within the best sectors, your chances really do improve for owning a stock that is just about to take off. And so yes, you do have to spend some time trying to get a sense of which sectors are doing well. That will help you narrow down on the list of stocks that you are watching. Or let's say if you already own 1 or 2 stocks from a sector that has been doing well, and you see a lot of the same sector stocks in the list of stocks that you are watching. For example, right now, as I go through the day here, I'm watching and taking a look at all these stocks on my watch list. If I already own, let's say, a biotech stock, and I don't want to look for a biotech stock, you can see here is a biotech stock, so I'll definitely not be looking to buy this one, because why? I already have another biotech stock. So one way you can reduce the number of stocks in your portfolio or in your watch list is to go and take a look at the sector performance. Another thing you can do is make sure you consider the Moire angle of penetration. And this is also going to help you narrow down on your list. And I have a lot of video explaining what this means. The Moire angle of penetration is a visual way to determine which stocks in the group could do well for you. And generally speaking, without going into too much detail, because I discussed this in other videos, what you are looking for is a stock with a sharp angle of penetration. So let's take a look here. Let's take a look at a stock with a good angle of penetration, and I'll explain what that means. All right. For example, take a look at this instrument here. You can see that while it moved above, I just got an alert for WIX. Hope you can see that. Just got an alert for WIX. So let's take a look at that one. In fact, let's take a look at that stock and see how it looks like on the charts. So you see that WIX, I just got an alert, which means that confirmed that it's breaking out above the previous monthly breakout. Now that alert was manually set by me, so it's not like the market just, so I had set an alert for the stock. If it ever moves above this price range here of about $25, that I should take a second look. And based on the way the MACDs are behaving right now, it looks like we have the minimum requirements. The stock seems to be breaking out in price, and that's good. We also see that the MACD is just about to move to all-time highs on the monthly, or the RSI, excuse me, the RSI, my bad. And we see that the MACD is, at least one of them, the other one is not fully developed, so it's not showing. But this one here is already trading at all-time highs. So this one is one that I can definitely take a deeper look to see whether other parameters meet. Now I was talking about the Moire angle of penetration, and what this is, let's go back to the prior stocks, is you want to find stocks with a sharp angle of penetration as they move above 69.10. The sharper this angle of penetration, the more the stock has velocity and strength. Hope that makes sense. So I go into details, so there's no need to do that in this video, but I talk about the map or the Moire angle of penetration in another video series on my YouTube channel, so take a look at that. But it explains that what you're looking for also, if you have a group of stocks, you don't know which one to go with, you're better off picking one that has a good Moire angle of penetration. For example, let's take a look at Goldman Sachs, which is on the monthly breaking out, but you can see it has low angle of penetration when it's moving above 69, and even recently here the angle of penetration is very low. That's not what you want. You want stocks with steep angle of penetration. As an example, take a look at RDUS. Now if you take a look at this one, doesn't have a fully developed monthly chart, so let's go to the weekly, and on the weekly we can see that recently the stock jumped up, and I believe this was a Moire subscriber pick. It broke out there. take a look at the angle of penetration as the stock moved above 69.1. So that sharp angle of penetration was indication that this one was set to move higher at a very fast pace. Since then, the stock has almost doubled in price, or at least about 80-90% since the last 1, 2, 3, 4, 5 weeks. So take a look at the angle of penetration videos. But then again, what I'm saying here is you want to make sure that the stocks you are looking at, to narrow down on your list of stocks, that they meet the minimum requirements of at least having sharp angles of penetration on the weeklies and on the monthly charts. The other thing you can consider to narrow down is what I call ugliness. You want to avoid as best as you can stocks that show a lot of ugliness on their charts, because those types of stocks just tend to fail. And I'll give you an example. This is one that we've been watching, and unfortunately it has an ugly chart on the long-term monthly view. NVAX looks great on the weekly, but if you take a look at a multi-year monthly chart, so multi-year going back to 1995 monthly chart, take a look at how ugly this thing is. This means that eventually the chances of this one collapsing at any point are very high. So yes, right now it's seeing the other side of its behavior when it's moving higher, but it tends to give back gains very easily. Giving back gains is just the norm for some stocks. And you can see here the risk now is the next big move is going to be lower because of the behavior. So you want to avoid stocks like that. Conversely, you're better off owning stocks like, for example, let's take a look at Netflix, which has had a nice run. Compare that to the previous chart. Take a look at this brisk action here. Nice trending action. When it's moving and it holds on to its gains. Take a look at, for example, Apple. You can see this one has been a monster moving stock. Take a look at this nice swift monthly action. When it's moving higher, it holds on to its gains. Take a look at one of the best performing stocks since 2000, Monster Worldwide, or Monster Beverage, sorry. And you can see when it moves on the monthly chart, it holds on to its gains. These are the type of stocks that you're looking for. As an example, there's one that I was looking at earlier, but the monthly chart was ugly, so I removed it from my list. And not the worst looking, but you can see here, even this one, I don't like this. The fact that it tends to just give back gains. This is one that I removed from my watch list because of this not the best looking long-term monthly chart. Take a look at this one here. Recently popped up on my watch list, but when I looked at the long-term monthly view, other than this period here, remember this was a late 1999, early 2000, and most stocks were actually just taking off for no reason. So if you take, other than that period, stock has had a period of up down action. That's the type of ugly chart that you want to avoid. So in narrowing down your list, there's another consideration. You want to avoid stocks that have long-term ugly looking monthly charts. The other consideration to reduce your list even further is the rest period. Of course, I won't go into detail, but I have a lot of videos on this. And on the monthly chart, you want at least 1 month of rest before the next breakout. On the weekly chart and the daily charts, so weeklies and dailies, you want at least 2 periods of rest, either 2 weeks of rest or 2 days of rest before your next breakout. So this is something I talk about and most of you are aware, but that's another way you can reduce your stocks you are watching on your list, because some of them have not rested well enough for them to be ready to move again. The other consideration in reducing your list, and I talked about this earlier, so I won't go into it, is you want to find stocks whose indicators are trading at all-time highs on the RSI and the MACDs. Why? Because when they're moving to all-time highs, it suggests that they are at their strongest ever. So those are the type of things you can look at. If you have 3 stocks trying to decide between one, and one of them is moving with its monthly RSI and monthly MACDs to all-time highs, you want to go with the one that's moving it to all-time highs. Why? Because that's when the instrument is showing its strongest ever potential to move higher. The other consideration is during the day, you want to keep a close eye more often on stocks that are trading more than 3%. So in other words, if you have two stocks that you're considering to buy, I know this goes contrary to belief, or it makes no sense, but if you have two stocks, one of them for the day, and this I'm talking about the move for the day, you want stocks that are already trading up more than 3%. At least that's what I do, because they are showing strength. If you have two stocks and you're trying to decide which one to buy, my advice is go with the one with the highest gain for the day. My observation over many years, and I've been doing this full time for many years, almost 10 years, 12 years full time, is the stocks that move the biggest even day to day are the ones that eventually gain the most over time. So if you have two stocks, you're trying to decide, one is up about 0.9%, and the other one that you like, they're equally good on the charts, everything is good on the charts, but one is up 0.9% for the day and the other one is up 6% for the day. If you're trying to decide which one to buy, you want to go with the one with the biggest move, because it is already, the market is confirming that it has strength in the here and now. So between two stocks, go with the one with the highest percentage gain for the day, every day, any day. All right. For example, this is my list for today, the stocks that are moving today. Again, I'm making this video July 16th, 2015. And for the day, I only spend time looking at stocks that are gaining more than 3%. And the other ones, I don't really care too much unless they are triggering an alert. For example, this one here is triggering an alert, so maybe I might look at it. But for the most part, I only concern myself with the stocks that are up at least 3% for the day. So when you're trying to narrow down, that's also another consideration. And one other thing that I forgot to mention is the general market. If there's anything that is more important, this is it. It has to be the one that determines where markets are going, where stocks are going. And so you really have to pay attention to what the market is doing. And generally speaking, this is, remember, 75% of a stock's move is based on the general market direction. That's a huge contribution. So if the market is bullish, more than likely the stocks are moving higher, generally speaking. And if the market is bearish, more than likely stocks are moving down, irrespective of what kind of research you do. So this is the biggest consideration, 75%. Remember, the next influence in a stock's direction is the 15% comes from the sector performance. So I always say you're better off spending 75% of your time understanding market conditions, 15% of your time looking for the best sectors, and then you can spend 5% of your time trying to find the best, or at least, the rest of the time you can spend looking for the best stocks within the best sectors within a good market. Now, so visually speaking, this is what I'm talking about. So markets go up and down, down and up, and we can say in a bull market, the trend tends to be something like this. That's a bull market trend. And I would suggest you want to be as aggressive during this pullback, as aggressive as you can, because if you find stocks that are breaking out during these shallow pullbacks in a bull market, those are the stocks that are going to be moving with pace and are the ones that are going to be making you the most amount of return while the market is recovering. So as the market recovers, the stocks that were already trading at new highs during the pullbacks are the ones that are going to be making the most return. Also, you want to be less aggressive during this market tops. In theory, if you can figure out where market is stalling, then this is where you want to taper off and probably not be very aggressive, because the stocks you buy during these highs will tend to pull back as the general market also pulls back. So the time to be aggressive is when markets are coming off highs. And so that's when I say during this period here, this is the time period where you need to be going long, because that's when markets are going to be rewarding. So this is what and where you should be looking to go long during a bull market phase. It's easier said than done. I recognize that, but that is essentially what you're trying to do. As an example, right now we are looking at the US market trading with the Nasdaq coming close to all-time highs again. But the problem here is, and this is the reason why personally for now I have not been aggressively recommending stocks, because the market has come back on the daily charts to this potential level of resistance. If you take a look at these lines, now I won't go into the analysis just because that's not why the video was recorded, is because if this is going to be resistance, then we have to be looking for reasons not to be aggressive. If the market breaks out above this resistance line, then we can be aggressive because resistance has been blasted through. So a break above this resistance line, then we go back to being aggressive because the market has cleared resistance. Now, the time to have been bullish and finding ideas was during this period here, this pullback, which happened to be this period. If you went long here with breakouts, those breakouts have done superb over the last couple of weeks. Also, you can see that at the same time, right now you're looking at the Dow Jones on the daily, showing potential resistance on the top side. This line connects RSI tops. Remember, about 2 weeks ago, the market was trading here, and this is when we should have been long, and we were looking for ideas to go along at this time, because you want to be aggressive when things don't look right in the market, but when you are finding uniformity support. And I'll talk about that towards the end of the video, because the market found uniformity support, and I discussed that uniformity principle in many videos on my YouTube channel, and I'm sure you're aware of this. If this holds uniformity, this is when we had to be aggressive here. It also happened to be a level around the 200-day moving average. So again, the key is to buy the market on pullbacks during this phase, like it was the case about 2 weeks ago. Right now we are looking at the market also on the Dow Transports coming back, showing topside RSI resistance. If that is the case, we have to taper off from being aggressive. So the consideration is that even though we are looking for breakout ideas, we have to be aware that the market climate is such that this could be a place where the market does pull back. S&P 500, you can see here looking like either this is going to be a breakout level. If it can break out, then we have to be aggressive again because it has cleared resistance. But if this area is where it shows resistance, then the indication is that this market could pull back. If the market is pulling back, then we don't want to be aggressive. We see that the market is also coming back to this top side line of resistance here. If that is resistance, that means that we have to taper off from being aggressive. Let me point out one more thing here is, again, the time to have been bullish was about 2 weeks ago, about a week ago, when the market came back and by way of uniform action showed double bottom support here, and also happened to be a level around the 200-day moving average. It tested the 200-day moving average, and since then it's been moving higher. Anybody who was buying stocks here during this pullback has made some good return, especially the stocks that have done well are the stocks that have been trading at new highs during this pullback, the short pullback. So the stocks making new highs at that time have done well over the last 2 weeks or so. In fact, I can show you two stocks. One of them is Netflix, which was breaking out while the market was pulling back. So take a look. The market was here, and since then, take a look at this nice move in Netflix. That's a great move because it was already close to new highs, and also Amazon has done well during that period. As the market was struggling, it has quickly found a way to trade at new highs. So that's the idea. You want to be aggressive when markets are pulling back. So coming back here to our graphic, when you're trading in a bearish environment, you want to be looking. So when markets are going down in a bearish environment, you want to be shorting the market or selling stocks during this shallow rallies. In theory, that assumes you can. It's very difficult, but that's your job, is trying to find these sell points if you want to go short, if you want to sell the market. And also that means that you want to taper off selling the market or going short during these periods here when the market is showing ability to bounce. So I hope that makes sense. So in conclusion here, the other thing we need to look for, if you don't want to buy stocks trading at new highs, then you have to understand and master this principle of buying stocks that are showing uniformity support. So that's the key. You have to understand how to use this method so you can have a chance of owning stocks that are not moving to new highs. I'll show you just one example out of top of my head here because I don't want to make the video too long. Take a look at a stock here, VLTC, which was moving well earlier today, up 62% for the week. Just want to show you that on the daily, you can see that it had moved from $1, had a nice move from $1 a couple of months ago and went all the way to $21 in about 3 weeks. Now we can see that that movement in price began during this RSI move. So the RSI had jumped higher during this period here. So this movement in the RSI began the nice move and the stock went on a nice run. So we can draw a line, which is the uniformity line or the symmetry line from here like that, and you can see without fail we had uniform activity support here. We went below the green line and back above it with uniform activity. The stock had at least a one-day jump from about $6 all the way to $9. So that's 30% in about 2 days. And here we see uniform activity below the green line and back above it. Looks like a nice U-type formation. And since that formation with uniform action, the stock has jumped from, let's say, about $5 and to date did touch about $9. So that's about what, an 80% jump in about a week. So by understanding that format, that's how you do it. Let's take a look here at ETF that we've been watching, and you can see here it is coming back to test the 50-day moving average. So if you don't want to buy the breakout, you can use this uniformity line here to find this entry recently. Around here you can see double bottom support on the same line, and that was good enough to give you a reason to go long somewhere here. And again, go back to the SPX, which gave us uniformity support on the daily. Very simple line here. It gave us a nice double bottom support, and when everybody was screaming that the market was going down or looked like it, the market stopped right here. Since then we've seen the market take off. So if you don't want to buy the highs, you have to understand how to appreciate the market by looking for levels on the stock's RSI where you can re-enter the stock after a pullback during this method, and using this method called the uniformity method. Let me just show you one other stock that we've been watching that has done well, and it is SGIM, which recently took off, and I had sent an alert to subscribers during this pullback, this breakout. So I sent an alert there to subscribers. Stock has done well. That's not the point. And we can see that on the monthly, the reason why I liked the stock is pretty obvious. So we were buying this breakout. This monthly breakout had already taken place, and our entry point was somewhere here. All right, about 850, I believe, or 830. And why did I like the stock at the time? It's not a secret. It's the thing, and the purpose for this video is to remind you again and again until you get so tired of it, that when stocks start moving, they have a signature, and the signature is always gonna be, or let's say for the most part, if not all the time, gonna be that the RSI moves to 3-year highs, MACDs move to 3-year highs or all-time highs, and you can see here also the stock had a chance of moving above RSI level of 69.1. So there you have it again. The stock looked good, but if you don't want to buy the next breakout, you can see that on the monthly it needs to have 1 month of rest, so you can't buy this month. On the weekly, the stock might have a chance of breaking out on a weekly if it moves above this recent weekly high of about $12.30. If you want to wait for the breakout, the next breakout is going to be on the weekly chart. Why? Because the stock has had more than 2 weeks of rest below this 1230 level. Now, if you don't want to wait for that, you got to consider the uniformity method on a pullback. And you can see that off the lows here, the entry point was somewhere here, and so we can draw a line from that level like that, and you can see that the stock has been using this for a reason to go long. Here's another alert, but hold on a second, and you can see, so I have to draw that again, so bear with me. Right there, uniformity support, or came close there for a nice low, uniformity support there for a nice low. If you are looking for an entry point, it recently came here and kissed that line very close to it, which was this low here at $10 and about 60 cents. So if you don't want to buy the high, your best idea would be most likely to use the uniformity method to get stocks on a pullback. Eric Muather with Muather.com. Good luck, peace, and blessings. Woo! Woo!